Hi everyone, you're listening to Earnings Unscripted, where we unpack what really happened in today's earnings without the corporate fluff. It is Tuesday, January 27th, 2026. I'm Susie, and today we are looking at Seagate Technology, fiscal Q2 2026. And honestly, for a piece of technology people kept saying was dead 5 years ago, this report feels surprisingly alive.
Alive is an understatement. It's a resurrection.
Right? It's arguably a flex. But before we get too excited, just a quick reminder that everything we say here is just our personal opinion, definitely not financial advice. We're just two friends geeking out over numbers. So Miro stock popped 10% after hours to around 408. What is the headline here?
The headline is leverage, pure pricing leverage. Look, the numbers are good on their own. Revenue came in at $2.83 billion, up about 7.6% from last quarter. They beat on earnings significantly, $3.11 a share versus the $2.61 people were expecting. But the real story, the real reason the stock is vertical right now, they are sold out.
Wait, like actually sold out or just we have a long backlog sold out?
No, literally. Management said their nearline capacity, that's the big drives for data centers, is fully allocated through the end of calendar 2026. We are in January. They are booked for the year. They're basically telling customers, if you want drives, talk to us about 2027.
Whistle. That is wild. It's like trying to get a reservation at that one trendy restaurant downtown, except the reservation costs millions of dollars and holds the internet together. So if they're sold out, that explains the margins, right? Because I saw gross margin hit 42.2%.
Exactly. That's the highest in years. When you have zero inventory risk and customers begging for capacity, you don't discount. You dictate terms. It's fascinating because volume, in terms of actual units shipped, was basically flat. But revenue and margins are up because they're shipping denser drives and charging a premium for them. They aren't shipping more boxes. They're shipping more data inside the boxes.
That's a great way to put it. Efficiency over volume. It's funny, though. Everyone talks about AI chips. NVIDIA this, GPU that. But Seagate is basically saying, cool, you have the chips to create the data. Where are you going to put it?
Precisely. That's the Agentic AI angle the CEO mentioned. Everyone forgot that AI generates massive logs and checkpoints. You can't store petabytes of training data on expensive flash memory. You go broke. You need Rust. Spinning Rust.
Spinning Rust. You make it sound so vintage, but clearly it's profitable Rust. So we have a massive beat, margins over 42%, and a sold-out sign hanging in the window for the next 12 months. Is there anything in this report that made you squint? Or is it just a victory lap?
Well, nothing is ever perfect. Free cash flow spiked to $607 million, which is great, but they also have this lingering issue with convertible debt dilution. And they're effectively capping their own upside by being capacity constrained. If demand doubles tomorrow, Seagate can't capture it. They're maxed out.
Ah, the classic good problem to have that turns into a bad problem if you lose market share. Okay. I want to dig into that capacity constraint and this new HAMR technology they keep talking about. Because if they're betting the farm on this new tech and they're sold out, the execution risks must be massive.
Oh, absolutely. They're walking a tightrope without a net. But the view is spectacular.
All right, let's get into the details.
Yeah, and HAMR is the key word there. For anyone who hasn't been tracking storage physics for the last decade, which fair enough, HAMR stands for heat-assisted magnetic recording.
Right, the lasers.
The lasers. Effectively, they put a tiny laser on the recording head to heat the disk surface for a nanosecond so they can write data into smaller, tighter spots. For years, critics said this was science fiction, or at least an engineering nightmare that would never scale.
I mean, putting a laser on something spinning at 7,200 RPM does sound like something Wile E. Coyote would design.
It does. But here's the thing that really matters in this report. It works. The CEO confirmed that their Mozaic 3 drives, that's the HAMR product, are now qualified with all major U.S. cloud providers.
Okay, so the science project graduated.
It graduated and it's getting a job. This is crucial because it validates their roadmap to 30, 40, even 50 terabytes per drive. And that links directly back to why they are sold out.
How so? Is it just that everyone wants the new shiny lasers?
Well, yes and no. It's about density. I caught this detail in the CFO's commentary. Exabytes shipped were up 26% year over year. Massive growth, right? But the actual number of units shipped, basically flat.
Wait, really?
Yeah, flat.
So they aren't selling more hard drives. They're selling better hard drives.
Exactly. They are selling the same number of metal boxes, but the boxes hold way more data and cost way more money. That is pure margin expansion. It's like a real estate developer realizing they can stop building new towers and just magically add 10 more floors to every building they already own.
And charge penthouse rates for them.
Precisely. And this is where the sold out through 2026 thing gets interesting. Usually, when a company says they are capacity constrained, investors get nervous. It means you're leaving money on the table. If a customer wants to buy and you say no, they go to the competitor.
Right. You open the door for Western Digital or Toshiba.
In theory. But Seagate is saying they are allocated for 18 months. That implies the customers, Amazon, Google, Microsoft, have already signed on the dotted line. They aren't shopping around. They are locking in supply because they know the AI data tsunami is coming, and they can't risk running out of storage.
So Seagate has them over a barrel?
Barrel is a strong word. Let's say a mutually agreed upon stranglehold. Seagate isn't building new factories to meet the surge. They are holding supply steady, transitioning the lines to HAMR, and letting the price go up. It's actually incredibly disciplined. They're not chasing market share. They're chasing profitability.
Which explains why they retired that $500 million debt note early. They're cleaning up the balance sheet while the sun shines.
Yeah, although I do have to be the buzzkill for a second.
Ugh, there it is. I was waiting for it.
Look, being sold out is great for margins today, but it makes you fragile. If you are booked for 2026, you have zero flexibility. If one of those big cloud guys suddenly cuts CapEx, like we saw in 2022, that backlog can evaporate. Or if the HAMR drives have a quality issue in the field, you have no backup inventory to swap in.
So they're flying high, but they've burned the safety net.
A little bit. They are betting that demand is secular, meaning it's permanent, AI growth, and not just a cycle. But seeing them retire that debt and manage the transition this smoothly, I admit, I'm less skeptical than usual.
Wow, Miro, less skeptical than usual. We should put that on a t-shirt.
Don't push it.
Fair enough. But it really does feel like a pivot point. They've gone from fighting for survival to basically telling the biggest companies on Earth, like, take a number and wait.
Yeah. So let's step back for a second and think about what all this means for the next year or two. Because if the storage layer is this tight, that tells us something about the whole AI infrastructure stack.
It tells us the bottleneck is finally moving, doesn't it? We've spent 2 years obsessing over who has the fastest chips to create the data. Now suddenly everyone's realizing they need a secure place to put it all.
That is exactly it. It's the second phase of the infrastructure cycle. The CEO called it Agentic AI. Basically, AI that goes out and does things, creates logs, creates history. That data is heavy. It needs gravity. And right now, Seagate owns the gravity.
And they're charging a premium for it. Looking ahead to Q3, the confidence is palpable. They're guiding for $2.9 billion in revenue and earnings per share around $3.40. That is not a management team expecting a slowdown.
No, it's a management team expecting to dictate terms. But that is also where the risk sits for the next few quarters. When you guide that high and you are fully allocated with zero spare capacity, you are priced for perfection. You have no buffer.
Right. So if a factory goes down or if that global tax rate volatility, the Pillar 2 thing they warned about, hits harder than expected, there is no wiggle room.
Exactly. Plus, you still have that lingering dilution from the convertible notes. There are about 8 million potential shares still hanging over the count. It's like driving a Ferrari with the handbrake slightly pulled. You are still going fast, but the engine has to work a little harder.
Well, for now, they seem to be winning the race regardless. It really feels like Seagate has shifted the narrative from a cyclical commodity box mover to a strategic utility.
A strategic utility with 40% margins. I'll take it.
I think most investors will too. All right, that is the reality check for this quarter. If you're long, you're smiling. If you're short, well, our condolences.
Dried. Thoughts and prayers.
Exactly. Okay.
But in all seriousness, that wraps up our look at Seagate for this quarter. Thanks for hanging out with us. Before we sign off, I want to take a moment to pull back the curtain and explain what Earnings Unscripted actually is.
This project is an experiment by a small team of enthusiasts exploring the frontier of artificial intelligence. Everything you just heard, from the financial research and the script to the fact-checking and yes, even our voices, was created by a team of AI agents working together. The goal isn't just to read numbers, but to see if technology can help us deliver high-quality, up-to-date information in a way that feels genuinely human.
We are trying to find that sweet spot where data meets conversation. We're still learning and refining the process, so we would love to hear what you think. If you have questions, comments, or just want to say hello, you can reach out to us at earningsunscripted@datamadness.ca or follow the project on X.
It's been a pleasure. See you after the next call.
Bye, everyone.